We're going to talk about the convergence of financial communications and social media today. And at least in my own experience, and possibly in the experience of some of the folks in the audience, the interesting thing about that title is that social media, notwithstanding how ubiquitous it is and is becoming, and how important things like Facebook and Twitter are to a lot of people around the world, that line doesn't necessarily always intersect with the financial communications line in a way that you would expect. And we're going to kind of explore some of the reasons for that unexpected lack of convergence and some of the ways in which there are convergences and what the heck companies should do about that. Before we actually begin the discussion, we do have some slides that we're going to take everybody through. It's a little bit of an unusual format, but I hope it is illuminating. It'll give us a real substrate for the talk. Mitzi and I are going to be presenting that, and actually, even before we do that, I'd like the four of us on stage to just kind of introduce themselves very briefly so that when we get into the slides and into the discussion, we can kind of do it all at one fell swoop. So why don't we just start with Mitzi, if you'll just tell the audience a little bit about who you are and what you do.
Hi, I'm Mitzi Emrich, and I lead the digital and social media engagement practice at FTI Consulting. The research we'll be reviewing today is something that John and I just conducted together, and this is sort of the launch of this data today.
And I'm Paul Fox, Director of Corporate Communications for P&G, and I met most of you this morning, so I'll cut my intro short.
Yeah, I'm Herbert Heitmann. I just arrived literally minutes ago. I'm coming from Germany, where I now run communication for Bayer. Before, I had the opportunity to manage Shell's reputation globally for 3 years from The Hague, and before that, 12 years, all the communication, including investor relations for SAP, the only German software company of global relevance. And I'm glad to be here.
And I'm Mike Fernandez, and I'm probably the oddball in this group in the sense that not only do I lead corporate affairs for Cargill, but Cargill's a privately held company, but I'm also sitting up here with a master's degree in accounting and have led the investor relations function in other companies.
And just for some more context, for those of you that don't know, Cargill, if it were a public company, would be number 10 in size in the world, and it's actually the largest privately held company, at least according to the publicly available information. So on that note, let us talk a little bit about the research that we did. This is basically, we talked to several hundred institutional investors in October and dozens of reporters and editors about their kind of opinions as to when they use social media, when they don't, why it's valuable, why it's not. And let's take you guys through it. Mitzi and I will talk a little bit about that. So I assume, there we go. Okay. First slide, fairly simple. It's something that we parrot on a lot about at FTI, which is that you can't narrowcast anymore. You need a unified messaging. You should be saying approximately the same thing to different audiences all at the same time. That said, stakeholders have very different reactions to different situations. What's interesting is that an overwhelming amount of the press and a near majority of investors think that breaking news is useful when it's communicated on social media. They look to social media for breaking news. They associate breaking news with social media. At the same time, and Mitzi can chime in here, they still have difficulty finding the information they want from corporate sources, which is perhaps part of the reason why they go looking for breaking news on social media channels. So.
And what I think is really interesting about this is, obviously media is a little bit more adept at finding this information than investors may be, but ultimately they're also having a difficult time because a lot of times from a corporate perspective, those channels aren't set up to communicate around milestones or financial communications. A lot of times they're driven by marketing rather than reputation. So when it comes time to release financial communications or other sensitive data, it's very difficult to find from a corporate standpoint because it's sort of lost in the clutter and the stream of all the other content companies are putting out that are maybe more oriented around products or services.
And therefore, at the same time, companies are, and audiences actually, are increasingly turning to multiple channels. This means that folks in different parts of large organizations, like the IR part of an organization, the PR part of an organization, the marketing part of an organization, have got to work together, even if the organizations aren't necessarily set up like that, because if you look at just the press for a second, media covering a company's performance, according to our research, are as likely to participate in a expensive, carefully orchestrated webcast, they're as likely to do that as they are simply to post a question or look for information through some kind of social media channel. And overall, again, the press at least turn to corporate-owned platforms when they are evaluating a company. And before I move on, okay. All of that may be true. One area of huge agreement, which is not surprising, is that when people want to get information from a company or make decisions about a company, whether they're press or investors, they want direct interaction with a company. That's great, but we all know that that does not scale particularly well. So if you can't necessarily scale those direct interactions with management to the degree to which the press and investors always want them to be scaled, what else do you do? And here's where we get a divergence, and here's where the parallel lines don't actually necessarily meet in ways that we would expect. The press is happy to look to conversations on channels like Facebook and Twitter when they're trying to figure out what a company is doing or make decisions about a company or develop opinions about a company. And they do so at a much greater rate than investors. Nearly 3 times the number of press say, yes, I will look at social media when evaluating a company. And not surprisingly, they also find social media channels significantly more valuable than investors do, maybe 4 times more valuable.
And I think we sort of have to ask ourselves on that last point, why do they find it less valuable from an investor standpoint? What is media finding that is making those channels seem more important and more relevant that investors aren't able to find? Because we know they're looking there and we know they want that information, but for some reason, the data or the insight that would be of value to them just isn't there right now.
And to that point, so you find it's not there for investors. What do they find valuable? Another point of intersection is that both the press and investors do like rich content. They like infographics. They like data visualization. But another divergence after that point is that the press doesn't find press releases all that valuable. I don't think that's news to anybody. However, investors still do find things like classically filed financial reports and press releases around them. They find them significantly more valuable than the media does.
And there's a question though there of credibility. So investors and media alike find press releases credible, but when you start to look at other factors like motivating and insightful, our research found that investors find press releases less valuable and less insightful from a motivation standpoint. So when you're thinking about an infographic or a video, investors found those to be 11 to 15% more motivating and around 15% more insightful. Media found the exact same thing at even higher rates. Media tapped out at around 30% more insightful and around 25% more motivating. So while press releases still have some credibility, if you're looking to drive action and really share insights, thinking about other content formats is obviously really, really critical. Something that's a lot of times left to more marketing-oriented communications.
Yep. And then the headwinds that we all face when we're kind of trying to address that credibility are not necessarily surprising either, but they do pose a dilemma. The bottom line, I guess, is that while, say, investors will look at a press release, they will find it more credible. They will also, though, find some things like infographics to be motivating. Overall, they just don't look at company-generated content as particularly credible. They basically, as it says here, company-generated content is undervalued by investors. But what is very valuable to investors is third-party content. That, of course, can include the press. And it also does include social media. So when investors do look to social media, they're more inclined to look to third-party social media commentary than they are to company social media commentary, which takes us back to our central question, which is what should companies do about the sometimes surprising, sometimes unpredictable intersection between social media channels on one hand and the uptake of information on those channels on the other. Mitzi, anything here before we turn to the last slide?
No, I think just coming out of that, that does sort of reflect that content thread as well. So if you're thinking that third-party influencers who are active online are going to be seen as a better resource, particularly by media and to some extent investors, what can you arm those third parties with? How can you start to engage some of those influencers so they go out and amplify your message? So when these audiences are looking for information and they don't necessarily want to hear directly from you, they want to hear from third parties, those third parties are armed and ready to go.
Right. And to put a fine point on it, regardless of what investors think about the way, the credibility of company information or how companies use it, investors also know that situations like, for instance, an activist assault on a company, they know that activists use social media. They're not sure that companies are prepared to actually also use social media to deal with the activists. And so there will be these inflection points that come up increasingly where investors have expectations of companies with regard to how they use social media. They have doubts about the company's ability to actually use social media. They themselves don't necessarily turn to social media on the part of the companies. It's all pretty tough for companies to deal with. So with that said, let's get some more voices on the stage and ultimately from the audience and talk a little bit about what to do with some of this information. And I'm actually going to start with Mike because because he's at that end of the stage, but also because he sits, as we've said, in one of the more unusual positions at a private company. Mike, talk a little bit about how Cargill balances some of these conflicting trends, and in particular, how you think about the importance of transparency or lack thereof from the position that you sit in.
Yeah, so first of all, I think that one needs to take into consideration what the market is interested in and what the news media is interested in, and sometimes those are one and the same, but many times they're not. So that the investors are really looking for things that are going to have a material impact on the value of the company that they're looking at. Now, what's unusual, I think, when you look across the whole skein of activity, not only looking at financial reporting, but looking at the environment that we all work with each and every day, because it is kind of infringing on this space, if you will, or being a part of this space when we talk about financial communications. And that is that the world's increasingly more social. And what I mean isn't just social media. What I mean is that there's an expectation from various organizations, whether it's customers, consumers, NGOs, IGOs, public policymakers, that they're going to be able to interact with the companies and brands that they deal with in a different way. The other thing, the other phenomena that I think feeds the beast here is the notion that we're always on. That is, there's no rest to anything. There's a 24-hour news cycle. And there's just this thirst for information. So much so that my company, which is a privately held company, Cargill, made the decision some years ago that they would actually publish their earnings on a quarterly basis. And again, using GAAP and going and doing this in a way because, as our CEO is like to say, Greg Page, he says that in a world where nothing can be hidden, you better not have anything to hide.
And to that point, do you guys tweet? Do you have a Facebook presence? And if not, why not? If so, how does that fit in with the what sounds like a actual business incentive towards transparency, not just a regulatory incentive?
Yeah, I think, in a world where you're too big to be hidden behind the hedges, you have to find a way to communicate who you are and where you're going. Part of that is a financial component, but part of that is more dynamic too, in terms of ultimately businesses are built on trust. They want to signal to the world that they're, to use an accounting concept, that they're a going concern. And so we kind of look at it as fundamental to what we need to do in order to continue to drive our business.
So was that a yes to tweeting or a no to tweeting?
Well, in terms of, we do tweet, but not necessarily financial information.
Okay.
Again, being a business-to-business company as well as being a privately held company, there's not that charge to say, gee, we need to do this. If I were sitting and giving counsel to a publicly held company, it might be different. And indeed, sort of the case that brought us here when the CEO from Netflix decided to share trend data over his own Facebook account, it raised the issue with the SEC. And I think, where I come down is whatever you're going to do, I think you need to signal it to the marketplace so they clearly understand how you're communicating and what you're going to communicate in various realms. So people aren't surprised and there's no perception that somehow you are trying to hide some information.
And Herbert and Paul, quick kind of two-person lightning round. Tweet yes, Facebook yes, tweet yes, Facebook yes, or no?
Yes, yes, to both sides.
Yes, yes.
I think you
And not surprisingly, yes and yes.
Yes. Okay. So, well, that's consistent, if not controversial. So, let's talk a little bit about, Paul, if you want to talk a little bit about, in your experience both at Bayer and I guess Shell before that, important or not, what do you do with the social media channels you use, and how do you think about using them, given some of the points that Mike has made and that we uncovered in the research?
I think from a P&G perspective, social.
I was wondering which way that was going to go.
Yeah.
He said Herbert, but then
Oh,
he said
sorry,
Paul's
Herbert.
company,
Paul.
and I wondered how they were going to handle that.
It was Herb's
I think we
presentation,
should
and it was Paul.
You should each answer on behalf of the other. That's right.
But I think social media for us is we've been in that area for a long time, and I think probably about 18 months, 2 years ago, we began to look at the use of social media for financial communications. Take a look at how we could use it. I think there are a lot of businesses right now that are looking in that area. It's a bit like the latest shiny new thing. For the marketing and comms function, it's been a part of our life for a long time. But for those people who are more devoted to the financial side of communications, I think it is, for some companies, a shiny new thing. But razor blades are shiny new things as well, and I wouldn't go playing with that, because you'll end up getting cut. And I think one of the things we are going to find is that there are going to be some serious mistakes made in this area with financial communications, because I think a lot of people are finding their way and balancing what can be shared and what can't be shared. Because it's not just about those 12-week cycles that we go through on the quarterly earnings process. Investors build that picture on a constant flowing, looking at all sorts of aspects of the business. So those sort of things happen throughout the year, and I think that's potentially where social media has the greatest value to us, not the earnings cycle and the direct financial information. I think it's the other parts of the tapestry which builds up a picture of a business and its investment profile. So I think that's where I think there's a lot more value. And looking at the data, it's not surprising that investors don't pay a huge amount of focus on social media. I certainly wouldn't invest $5 billion based on a tweet. I mean, you're playing with a lot of people's money, and you need some veracity. But I think what it does say is it interesting how the media will put more veracity against social media than, of course, people who are playing with yours and my pension funds, and that's probably makes me sleep happier at night. Do you feel that?
And so, Herbert, I'm going to talk a little bit about that. One would hope that you don't invest billions of dollars on the basis of a 140-character tweet. At the same time, we know that those tweets can move markets. Icon, among others, has proved that. So somebody is making investment decisions on the basis of that. How do you think you should thread that needle?
Maybe first to comment on the presentation that you shared. When you see it on first sight, you might conclude that media is more social media savvy than investors. The opposite is the case. My experience is they were earlier taking advantage of these channels, like they always depend on the best and most real-time information they can get, and social media certainly provides this. But they're very selective. They have their models, how they interpret the company, and they have certain kind of information that has more relevance to them than others, and that differs from company to company. And I would strongly advise every communicator to get very early head-to-head with your investor relations colleague and understand which are these kind of drivers, because then you can get the most value out of this if you work together. On the other side, when you have a crisis, I think then the flip side of the social media comes to play, because while the PR department might be still looking for a nicer word to describe the disaster, the picture is on Twitter already available that shows the disaster, and you can be sure that the investors have seen this before your press release hits the wire explaining the situation. And better you anticipate this and speed up and be as transparent as possible, because these days it is so easy and so quickly to find the gap between these things. The interesting development that I saw in the last job was that you have the group of socially responsible investors, which more and more, particularly in Europe, can be big foundations or governmental-owned funds who have given themselves very strict criteria far beyond financial performance in the space of sustainability. And they are a prime target, to say so, for NGOs and activists. And they certainly look at your presentation and your activities far beyond your financial performance, and at one point can confront you with major decisions to divest, which brings the company in big trouble. So that's something I've seen in the last couple of years becoming more influential, particularly for companies who operate in environments that are topic of discussion.
And Mitzi, from your perspective, looking across a variety of different clients and sectors, how do you, it sounds like we've got a couple different interesting things here. One is that there may be the idea of social media as not so much it's not so much that it's effective in the quarterly cycle, but between the quarterly cycles, the other idea is that there are specific times when you would want to broadcast over social media, perhaps during a crisis, and other times where you want to be very, very, very pinpoint in your use of it. Perhaps there's a couple key metrics that investors look for. They're the ones that they only pay attention to, and the two figures and the top two subheads of the press release. Maybe those get tweeted out, but I don't want to put words in your mouth. What do you think?
I think the points that everyone has raised are probably where the biggest challenge lies. There is a question of, do you set up these channels for your financial communications? And then if you do that, how do you make sure that you're not just communicating once a quarter? What do you do those other months in between the next announcement? So how do you populate those channels if they're just dedicated to financial information? How do you keep them running? And we've seen, there are great examples out there of companies like eBay, which is kind of expected, a very tech-savvy company, but Alcoa is a great example, a very industrial company, a company that you might not realize would be so savvy, but they're communicating around financial news and information on a daily basis on social channels. But you do see a lot of companies and organizations set those channels up as a dedicated platform, separate from their marketing communications, and they don't really know what to do with it once the earnings announcement is over, and so it sort of goes silent for a few months, and then it crops back up again. The flip side of that, though, is what Herbert sort of alluded to. When a crisis strikes, your investors are going to be looking for that information. If you've just set up channels from a marketing standpoint, having suffered through this with many a client where an issue happens, and it could be even a positive corporate issue, but corporate does not have access to those social profiles where all the followers live because they're run by marketing or another team within the organization, you're really stuck. Looking at, Herbert and I sort of worked together around some issues that Shell had that were very reputation driven a couple of years ago. Fortunately, Shell had been forward looking enough that they had channels set up for media relations and for stakeholder communications on social channels aside from their marketing stream. So they were able to jump in very quickly, very rapidly, correct the record, and get their message out. When I think back to that event, had you not had those channels, I wonder how quickly and how easily you would have been able to do that.
But maybe if I'd like to add one thing to this, because having the channel is one thing, but also you need to very quickly make sure that this channel reaches a significant amount of individuals out there, because that's the best insurance, I would say, against any form of activism. When we started at Shell, initially it was a big debate, should we do this, don't we open up too much? But it was the intention of the CEO to open up what so far was often perceived as a fortress and closed shop when it comes to communication. And then it became clear we need to quickly gain support all around the world. And we gave ourselves a very ambitious target that we want to have one day more fans than Greenpeace, which from a European perspective sounds even more ambitious than probably here from a US perspective, but we are a global PRSummit, so we can bring all these facets into the discussion. And we were kind of amazed when after 3 months we had more fans and supporters than Greenpeace. And I was a little bit wondering whether this is all still serious and going the right way, and Facebook confirmed, no, they are real and they are growing, because what they helped us to find, where are the people in the world that actually like what a company like Shell is doing. And they don't sit in The Hague, they don't sit in London, and probably they don't sit in Washington, but they sit in Malaysia and Indonesia, in places where energy is short. And that was a tremendous driver for lots of changes within Shell's communication, getting this global feedback in real time, but also having a community that whenever somebody had, and there are lots of reasons to have critical perspectives, this community started to debate around this. So it was not Shell responding to somebody who accused us, it was a Shell fan in the Facebook community, and that made it extremely powerful. But therefore we had to have these millions of supporters, otherwise Greenpeace is very potent and powerful, they can mobilize hundred thousands, and if you can't put millions against this, you can become a big victim of this.
And so let's talk about that I think is a question hopefully on everybody's mind is, okay, challenge number one is developing a fan base, if you will, on something like Facebook. Challenge number two, though, is what do you do with that fan base? Let's suppose you actually do accumulate more fans than Greenpeace. How easy is it, or is it not, to actually mobilize that fan base? I guess there's at least two things you can do. One is just term it, as you did, both of them, like there's a certain market intelligence you get from the fan base. You can see what they're doing. But the other is you hopefully can motivate them to do something. So it sounds like you've had some success motivating that fan base. I don't know if you take a similar approach, or what do you feel the ROI is to the idea of Facebook fans and likes on a page?
Well, I think it's a really interesting question, and I might be tempted to be fairly provocative with the answer. Just because somebody pushes like on your Facebook page doesn't mean they're an advocate of yours.
Right.
Right.
And we've got some huge brands, and they have millions of fans. Mm-hmm. But I think it's a very misplaced assumption that because you have this community, that somehow they will be like a virtual army that marches out to protect you when your brand comes under attack. Because I think there's case study after case study that will show you that just simply doesn't happen. I'm delighted that one fan on Shell site came to their rescue. And it does happen, but it depends on the circumstance. But I think it's very foolish to think just because you have a big fan base that somehow you've got this virtual army that will come and attack you.
But that's what it starts with.
Yeah.
When you only have 40,000 fans, then you don't have to worry about the rest. When you have millions and you engage with them, you respond to them. We knew the 5 topics where usually the attack came from, and we could respond within minutes, less than minutes sometimes. And just the fact that we responded gave us so much credits that we could see how people who yelled at us because of high petrol prices, understanding where they really come from, half an hour later engaged in another discussion and all of a sudden showed up there as a Shell supporter. So I think you can transform people through engagement, but the beginning is that you find them and that they like you, otherwise you're not in touch with them. But I'm absolutely with you, just liking is not making the trick.
It tends to be a game of numbers, really.
And Mike, you look like you had...
Well, and I would just say, I'd look at this more from a political point of view. I mean, in the sense that, I think it's great. You go ahead and you've got an army of people who say they like you. But at the end of the day, that's a base. And similarly, you might look at Greenpeace or some other organization as having a base maybe on the other side. And that really, the real battle is how do we tell our story to those people who are truly persuadable, who are public policy makers, who are investors, who are decision makers in the process. And part of that, indeed, can become a solution that's based in social media. But I think we go a little awry if we invest too much in kind of the social media god, because I think at the end of the day, it's fundamentally just a tool, albeit it's a huge tool. It's fast, it's quick. We can reach large numbers more quickly than ever before. But in some ways, it's not much different than what it was 20, 30 years ago. It's just much, much faster. And when we make an error in today's world, it's a bigger error as a consequence of it. But also when we win, we have the potential to move large segments of truly persuadable individuals, people who can be influenced in huge ways that can be very, very important.
And so, as I listen to that, part of what I hear is, I hear that things are faster. It is a tool. It's not something that it should necessarily be regarded as independent of that. But, I guess maybe Mitzi, you should weigh in here. Would you say this is the type of tool where it's a classic Archimedes lever? You have a time, you get that one person who they tweet something, you respond favorably to it, you make them happy. Then they pop up somewhere else as an advocate and cause a ripple effect because it's them, is that how we should sort of look at it? The app not having the lever puts you at a disadvantage. Having the lever may advantage you, but to your point, to completely mix metaphors, it could be a razor or a lever. Mitzi, weigh in here a little bit and talk.
So I can stop your bad metaphors.
Yeah, exactly. Nothing else.
I would say, having come from a traditional political background, I worked for many years on the Hill for the Sierra Club. So poor Herbert, I'm sorry. My former colleagues were the ones coming after Shell. It's in some ways, Mike's right. It's no different in the sense that you want the loudest 50 people in the room. Now, at the end of the day, we know that means I just got 50 people in a room, and they're probably the same 50 people I turned out the week before and the same 50 people I turned out the week before. It's not that there are 150 people that are supporting my cause. It's just that there are 50 loudmouths who will sort of do whatever I ask them to. Social media in some ways operates the same way. I can have 5,000 followers or 50,000 followers. Odds are just a small percentage of them are going to be very active. But I think the critical part of that is they're only going to be active if we ask them to be active. So that's something that I think a lot of times companies forget is they have a big fan base. Something happens, whether it's positive or negative, they have some sort of milestone or event. They forget to ask people to speak up on their behalf, to share a piece of content, to contact an elected official, to participate, heaven forbid, in something offline. We forget to sort of link it to other actions. We assume that they maybe saw something we posted in their feed and they know what to do with it. So I think it's really critical to actually engage them more deeply and ask them for help. That's something that a lot of times companies don't want to do, is ask a customer or a supporter to go out and do something for them. But when you do ask, it does have an impact, knowing that at the end of the day, no one is going to take a vote on Capitol Hill in DC or in the EU because of something posted on social media. But we see time and again that elected officials and their staff evaluate constituent opinion on issues by taking the pulse of the conversation online.
Right.
So having people speaking on your behalf is critical, but they're not going to do it unless you ask them to ultimately.
Okay. And so let's, as we start to wind down, let's get tactical for a second. And I'm going to turn back to something that a couple of you mentioned, which is that, the possibility that if you start to try to build up a Twitter presence or a Facebook presence right when you need it most, it's too late. That you should be investing in some kind of social media presence ahead of events where you might actually need to deploy it. The tactical question is, if that's true, do you guys, and Mitzi, you should definitely weigh in here as well, is this a case where you want multiple Twitter handles for different purposes? Or do you find that having a single Twitter handle that aggregates all types of different content is useful? Do you think there's a best practice there? Do you think it's undefined? Discuss.
So I go to an entirely different space. I would say there's already conversations being had, usually about the issue that there's going to be a controversy about. And what you want to do is think about how do you play into those audiences. You want to go where the battle is. You don't want to stay on the home field and wait for everybody to come. And I think that that's the tragic mistake that a lot of people make in this space, is they think, I'll build a site and they'll come. Field of dreams. And all too often, it doesn't work that way. All too often, the discussants dealing with a tough issue are residing in other spaces. And so what I encourage my teams to do at various companies that I've worked with, and even today, is let's get involved and engaged in the conversations where they're being had. Let's look where we can develop shared belief with those audiences so that they have reason to believe us as we're making our case.
Yeah, I couldn't agree with Mike more. I mean, it really is, it's meaningless. It doesn't mean anything what I think, whether I want 20 Twitter handles or one Twitter. It's what my audience wants. How do I reach, am I really defined on who actually moves the market for me? Right? And am I communicating to them in a way that they want? Now, if that means that they, to review social media, well, that's a channel that I need to take a look at. And to your point earlier on about Carl Icahn, he posts a tweet and the market moves. That's not the channel. That's the who.
Right.
Right. And he chose to use that particular vehicle to share some information. But it's him. I could not have moved Apple stock if Paul Fox at Paul Fox 1 tweeted that I was about to buy Apple stock tomorrow. I mean, people really wouldn't care.
Try it and see.
But, and again, you have to look carefully about that cause and effect. Somebody like that tweets, and the price closes 5% up at the end of the day.
Well, so let's.
I don't know whether it would have closed up 10% at the end of the day if he hadn't have tweeted.
Right.
You know what I mean?
Although I think the interesting thing with that icon example is that, sure, he could have gone to the Journal or FT and made that statement. The fact that he did it on Twitter generated twice the amount of conversation. So there was the bite of, he's talking about Apple's value, and then also the channel in which he did it. So it generated conversation and coverage on platforms that would have, or with influencers who would have never even looked at an IR conversation before.
Right, there's no question that the reach would have been significantly different, but it still goes back to the who. It's the who that's doing it and using the channels that are available today that weren't available 5 years or 10 years ago.
And I would add one element to this: it needs to be authentically the who sits on this, because what I've often seen is that a CEO looks like he or she is tweeting, but then it's the PR department doing this, and that smells from the very first moment and is completely ineffective. But if you have somebody, and I much more like the individual Twitter accounts where the chief scientist or the lady who runs the B Center, if they use this to express their view on this and label it as such, and then have one corporate channel here as well, or when you have a highly diversified business for convenience reasons, as you said, look at the audience. Do they want to be spammed with tweets from 10 different kind of divisions with very different products and services, or prefer this individually? Respond to this, but at the end of the day, I think it's a channel for individuals.
Yep. Well, so let me just redirect that conversation, or that question, because I guess what I'm getting at, or wanted to get at, which we're starting to get there, is if someone like Icon does something like what he does, and he tweets about his investment decision about Apple stock, what is the best way for a company that is the subject of that tweet to respond? Is it via social media? Is it to say nothing? I mean, the case of Icon in particular, maybe the best thing is to just stay quiet. But a different situation where he tweets in a different thing, I'm asking the question partly because of the last finding, which is that investors believe that this kind of thing is going to happen more often, and they also believe that companies are completely unprepared to shape the conversation that follows beyond that. So.
But the great advantage is that the company knows where the share owners live, at least the shareholders. So it has the ability in today's world to actually have email addresses already for those individuals and communicate, how they want to communicate to them, albeit within the confines of, what the SEC will allow you to do. But that's a huge advantage against someone like an Icon who's trying to stir a lot of pots, and it, in the initial phase, doesn't really know where all those shareholders are. So I think that I wouldn't get too worried other than understand the tool that I have, how I'm going to reach that audience, and what message do I need to sell to that audience that says, it's better to stay home than to go with Carl.
And so it sounds like one possible option you're talking about is there may be a big public tweet that moves markets, but resist the temptation to fight on that same battlefield. If you have information that the activist investor doesn't, you could deal with it through back channels. Again, would you guys agree with that? Is that a fair characterization?
I think it depends on what the charge is, right?
Okay, fair enough.
It's not like you're going to go back and forth and drive credibility to Carl Icahn, because that's what you'll do if you respond to every sort of movement that he has and everything that he says. But I think tactically, that's basically right. That you have an advantage that he doesn't have, but it still comes back to what's your message? Is he right in terms of what he's saying? And if he's not right, well, why aren't you defending yourself?
Now, at this point, I don't know if you guys want to weigh in on that.
I think the action will be the same as if he would have done this through an interview in the Wall Street Journal. You just might need to be faster because it's already there and you can't wait 24 hours till you respond. But the factual essence of the statement isn't different because he did it on Twitter or Facebook or Wall Street Journal.
And at this stage, I should ask, I want to open up the panel to some questions from the audience, if there are some. We've got about roughly a little under 10 minutes left. Does anybody have any questions? Yes, sir.
Hi, Stephen Forshaw. I just wanted to pick up on a point the panel made a moment ago about authenticity. Wondering if you can deal with that in a little more detail. The question around financial communications and how to become or remain authentic while communicating rather often complex and dry data. How do you see that working? Does it work? Is it something that companies in this space should be looking at?
Well, I hope I got your question right. I don't think that you can express an enormous amount of authenticity in communicating your financial results. It is rather standardized. But what I was referring to is if a CEO or any kind of executive feels that he or she wants to use these kind of channels, then I think they should do it themselves or have it done by somebody who they are very, very close to and who knows the style and can really express their view, because the audience detects this immediately if it's not made in this way. And then another good indicator is if hardly anybody follows you. If you are the CEO of a company and you have 100,000 employees, you should have tens of thousands of employees following you if you have something to say. But if what comes across in this internal blog or in these kind of tweets doesn't feel like it's you who says this, then people are not interested and will not follow you. And so that's what I meant, that if you go this route, you have to do it yourself.
And I think, there are companies right now that are experimenting in things like infographics, for instance. And, that's a problematic area because, if you're balancing GAAP and non-GAAP measures as you're supposed to do with your financial declarations, your infographic becomes very rapidly not very graphic and and not very informative, frankly. So, a lot of the stuff that you see, particularly from us on social media, is really directing people to the bulk of the content which lives online. But I think the other area that I think is fascinating is really to understand this rich tapestry of data that our investment community uses to build up that picture of how successful you may be over a 5, 10, 20-year period. And that's where I think, tapping into social media to supply that updates. So, clearly in our business, they look very closely at the sort of marketing spend we're putting in behind the brands, because that's investing behind the brands and should deliver, equity moving forward. So, highlighting those sort of campaigns or the investment in manufacturing around the world, particularly in the developing markets, is indicative of a business that's growing. So it's that sort of data, I think, becomes much more compelling to the investment community, rather than me every 12 weeks trying to put together an infographic, which, as I say, isn't very graphic and it's not very informative.
I think that the question of authenticity and voice is really important. I think that it's a constant temptation because you're in a medium that moves so much more quickly and tends to be sometimes very informal, that when you're communicating important information, whether it's corporate information or financial information, that maybe you have to lose your brand voice if you tend to be more formal in your communications as a company. That doesn't mean you have to go on Twitter and use hashtags every other words and end your tweet with an emoticon. You can still be true to who you are, and in fact, that will likely resonate more and be seen as more credible with your investors, with media, and other influencers. I also think, though, that reminding yourself or remembering that you can do just what Paul mentioned, and Mike brought this up earlier, you can be using it as a source to direct people back to more information. Yeah. You don't have to communicate everything in a tweet. You can communicate it in other formats and drive people back to that more complex or that deeper information. But just remember, I think, the nice sort of ribbon around all of that is how Apple handled the icon tweet situation. Apple does not do a lot of corporate and financial communications on their social channels. It's very marketing oriented. They stayed true to that in that instance. Yeah. They did not immediately reply. They did not have whoever runs their social media channels run down the hall to someone who handles financial communications and ask them how to reply. I'm guessing those two people probably don't even know each other. They continued using the channel as they always did. And they haven't really changed that, and they may not in the future. So if that's the case, that's absolutely fine. They've let people know this is not a channel where we engage in conversation about the enterprise value of our company.
And I think we have time for one more question. There was one up in front here, but maybe not. One more. Yes, sir.
I was curious where you think that social should sit within organizations where there's lots of compliance and risk factors.
I'm going to say with the PR agency. No.
I think you're about to get 5 different answers.
I think it's
I think it depends on. I think it really depends on the circumstances. I'm sure there are arguments and cases that say, yeah, it should belong to the agency. There's cases for why it should belong to the communications function and why it should belong to the marketing function. I think you just have to work as a team, right? It's less about who owns it. It's more about the content that actually gets put in there.
Yeah, I
and
agree
think
with
that
Paul.
that getting the people together is much more important than me stamping my ownership over something.
I think, again, it depends on the purpose. You know, if the purpose is to perform primarily a marketing function, maybe it belongs in marketing. If it's to perform primarily a communications function. And there are some companies that actually have social media capacity in both functions. And then there are some companies like mine where the marketing and PR functions are report into the same individual. But I think it's more about what are you trying to accomplish than whether you do it and where it's placed.
I agree, but I would say it should sit in the center of a truly integrated marketing and
Oh,
communications department.
there you go.
And run by a person who knows what he or she's doing.
I think it works best when it's integrated. You know, you can sit it, whether it's in marketing or PR or corporate communications, or have it on its own, which is something you're seeing more and more at companies that already have a very advanced communications function. They've created an entirely separate organization around social media. I think wherever it sits, having it integrated, having the marketing person who may be owning one platform and the FinCom or CorpCom person who may be running another actually talk to each other and not just talk to each other online, but in person sit together and strategize together. That's when these channels work the most effectively, and that's when your risk is minimized the most.
Okay. Thank you very much for your attention.